Hello, everyone. Quick agenda. We're going to be talking a lot about some 3-4 letter acronyms, basically the compliance landscapes. You can see the agenda there. I have some real world examples that we'll talk about, and then we'll talk about strategy, how we can protect you and your customers, and then we'll have some time for questions and answers. Okay, so it is kind of a dry topic, but I'll try to keep it light to some degree. But the compliance landscape consists of, like I said, a lot of these alphabet soup kind of acronyms. These are from payroll compliance, and it's referring to processes and organization that uses them to ensure they adhere to all these laws and regulations. And it's referring to employee wages, tax withholding, overtime pay, benefits, record keeping, and other aspects of pay and payroll. So in the United States, we have federal, the IRS. We've all probably, hopefully, filed our taxes on April 15th, a couple of days ago, or had an extension. But there's also state, local, and there's a mix of labor, employment, and payroll tax compliant mandates from different government agencies. You'll hear the Department of Labor, DOL, EEOC, Equal Employment Opportunity Commission, and those are just a few just to kind of get you started. You'll also hear the Fair Labor Standards Act a lot, FLSA, and this sets the minimum standards for employers regarding wages, hours, overtime pay. The law also includes some important record keeping requirements. Another acronym that you're going to hear is Affordable Care Act, or ACA. For those partners that work in the benefit industry, the health benefit insurance industry, know this quite well. For companies that have a certain amount of full-time equivalent employees, the law is saying that they have to offer a affordable healthcare option. And we'll discuss this a little bit later, more detail a little bit later. We also have state and local laws. So they're looking to provide minimum requirements set out by federal statutes, like the FLSA and EPA, local governments. They have a right to enact employment laws, regulations, overtime, paid leave is a big one, and other aspects of employment. Some recent updates that are impacting payroll. Federal changes usually means increasing limits. So the Social Security wage base increased this year to 176,100. Also FSA, the insurance, or I just lost what FSA stands for, but those contributions also increased. 401k contributions increased, and also the FICA with thresholds increased. One thing that hasn't, from a federal standpoint, increased is minimum wage. That still sits at $7.25 per hour, and that's been around since 2009. But you can count on the states to increase the minimum wage, and there are plenty of those increases. Each state has a different minimum wage, and so you can definitely keep up to date with that by going online or leaning on your payroll partners like us. All right, let's talk about some of the other compliance that we have to keep track of, and that is worker classification. So this is kind of a hot topic for a number of organizations and across the nation. This is correctly categorizing workers as employees or contractors, and it has significant implications for tax withholding and unemployment insurance. So misclassifying workers is a massive area of risk and exposure to businesses. You'll see areas like certain industries that have been cited for misclassifying workers. They typically are trucking industry, construction, janitorial, home care, delivery services. So if you have any clients in these industries, make sure you or someone in your organization can double check that they're classified correctly. The main difference between and we'll use independent contractor term 1099 and a W-2 employee is whether a company withholds and pays any taxes or not. Their employee status, and if they're eligible for benefits. And that's probably a big one for obviously a lot of our partners that offer insurance. So W-2 employees are eligible for benefits, independent contractors are not. Common misclassifying mistakes. So, one big one is to check state laws. And so there's a federal test or federal law that you have to adhere to, but then there's also state laws. So relying on a position or title, a generic job description that doesn't accurately reflect the employee's day-to-day tasks and responsibilities, that's typically a misclassified area, and the company has to look at the actual work performed in those jobs. Another area that we see that misclassify, they overemphasize written contracts or agreements they have with the person doing the work. So if it's written in an agreement or a contract, it doesn't automatically make them an independent contractor. So the company must consider all aspects of their work, company and worker relationship. Behavioral control is another area where misclassification happens, failing to recognize the significance of the employer's control over how the work is done. So think about time setting, following specific instructions or procedures, and supervising the work. So if there's employers that have that kind of control, they may not be an independent contractor. It also, by misclassifying the workers, there's a huge significant financial problem with that. It could be also civil and even criminal penalties could apply. And these penalties are staggering. Employer can be fined and held liable for unpaid unemployment or employment taxes, and for not paying according to minimum wage laws and or overtime. So these things stack up, these penalties. And if there's a significant pattern of behavior or the Department of Labor suspects a misclassification as lawful or willful, the employer may even face criminal charges. So this is a big deal. We're going to go into wage and hour compliance. So this falls under the FLSA, the Fair Labor Standards Act. And this requires employers to pay non-exempt employees at least 1.5 times their regular rate of pay for hours worked over 40 in a work week. That's the federal overtime law. To pay minimum wage for all hours worked. Now, state law, as you know, may vary. So a state like California, overtime is more than 8 hours in a day, and also 40 hours in a week. And so there's also some more complications where states like Alaska and Nevada, their overtime sometimes only applies to specific industries. So we definitely have to check the state laws on overtime. We'll talk a little bit about strategies, but obviously, knowing if you have a client that's adding employees in different states, you can always look up information, but relying on a payroll partner like us would be a big advantage to have as your clients are looking to expand into different states. Minimum wage misclassification. So failure to pay minimum wage. Employers must pay employees at least the minimum wage for all hours worked. So not just an average or less than minimum wage for some hours. Illegal deductions. So employers cannot make illegal deductions for walkouts, breakages, or cash register shortages. We're going to talk about a couple real life scenarios that we ran into regarding this, deducting some items after employee or as an employee is leaving, like upon a termination. So we'll talk a little bit about that. Tip pools is also looking at that. Tip pools must be valid and comply with FLSA regulations. So anyone in the restaurant business or where there's tips, that's where these wage and hour issues could flare up. Specifically, a company did include employees' non-discretionary bonuses in their regular rate of pay in calculating overtime. So this is another area to look into. So if you have clients that have bonuses, other types of pay, those have to be included in overtime calculations. And then we've got exempt versus non-exempt rules. So the main difference between these are if they are eligible for overtime pay. Employees that are exempt from the FLSA typically must be paid a salary, and that salary must be above a certain level or limit. They also have to work in an administrative, professional, executive, work in the computer like IT or outside sales. And these people are typically, these classifications are not paid overtime. And so there's a duties test for this. So Department of Labor has a test that can help employers determine who meets this exemption criteria. So this is probably another area that we see a lot of the misclassification, the exempt versus non-exempt. There's some very specific tests that are out there. Again, there's federal and state tests to look at. So these are also areas for you to look at with your clients and making sure that they're complying with this part of the FLSA. Employees that are non-exempt are usually paid an hourly wage or earn a salary that's less than the minimum determined by the Department of Labor. These employees are entitled to minimum wage and overtime pay when they work, again, more than 40 hours from a federal perspective, hours in a week, or in some of those states that I mentioned, 8 hours in a day. We also have meal and rest break violations. So certain states, the federal law doesn't mandate meal or rest breaks, but there are some states, like this great state of California that I'm in, have that. So California, for example, requires a 30-minute unpaid and uninterrupted meal break for employees working more than 5 hours. And they are paid a 10-minute rest break for every 4 hours worked. So a couple examples there. And like I said, I have some real life examples that we'll share as well. Another item is payroll fraud and data security. This is also another area pretty high up on the list to make sure your clients are taken care of. And so payroll fraud involves unauthorized access, a misuse of payroll data, and it poses a significant risk to businesses, leading to financial losses, reputational damage, and potential legal issues. So strong data security measures are crucial to prevent such fraud and protect sensitive employee information. So, a payroll fraud occurs when maybe an employee or an external actor accesses their payroll system to take money they haven't earned or to divert funds into an unauthorized account. So this could be going into somebody's computer and then adding direct deposit information unbeknownst to the administrator, and then those funds are diverted to a bad actor, someone outside the organization. So that involving manipulating of payroll records, creating fake employees, these are all different types that could occur. You might hear terms like a ghost employee, where they're creating these fake employees, inflating hours, falsifying hours, data breaches. So obviously there's a lot of sensitive information in the payroll system. So cyber criminals are looking into hack into those. And so we have to have some protections around that. And so some of that would be things like security around the data. So having multiple two-factor authentication when they log in, limiting, maybe access to the room that the computer's in, making sure that you shut down the computer at night, just trying to help limit bad actors from accessing that information. Strong passwords, like I said before, multi-factor authentication, making sure you have that not just on the computer, but most payroll softwares offer that as well, but turn those on. I think there are some systems out there that offer that as not mandating multi-factor authentication, but that's highly recommended to do that. Another thing is just keep up to date with the software. Microsoft sends out a bunch of patches all the time, so make sure you're updating the software on the computer. And then just firewall, general security, data security firewalls and intrusion detection systems, backing up information. These are things that hopefully you're doing as a partner, but just remind your clients as well that how important that is to keep their data secure, especially when it comes to payroll, because there's a lot of sensitive information in those payroll systems. We're going to go into tax withholdings next. So these are, obviously we all get paychecks. So we get a bunch of, again, those 3-4 letter acronyms that are coming out of our check, and we get a net check. Well, those are tax withholdings, and they have to be paid to certain agencies. And so, FICA, the Social Security and Medicare contributions, these are really important to make sure that the clients that you have that have payroll and they're processing payroll are making sure that they're accurately taking that with tax withholding out of those checks, and then remitting those payments to the appropriate agencies. And again, as I talked about with penalties, they're really severe if your clients don't do this correctly. So besides the failing of the timely deposit, there's also potentially employer matching. There could be state, there could be local. There's a lot of states out there that have local municipalities or other areas where they have to withhold money and make those payments as well. And these penalties can accrue quickly. So as they go over time, they typically build. So each one of these has a calendar, if you will, of when these deposits have to be made. And it also depends on the liability. So in large companies, they might have to make those payments the next day after payroll has been processed or the check date. And other times it might be quarterly. So these penalties become exponentially severe as they wait to fix the problem if they forgot to pay and those types of things. So you're looking at anywhere from 10 to sometimes 15% where they have a penalty. And so these are, misreporting mistakes or delays in making the payment. So we have to check all the different agencies, the state, local, federal agencies, to make sure you know the timing of it and making sure your client is actually making those payments. Obviously, there's software programs, like ours, Pay Entry. There's a bunch of accounting systems out there. Obviously, QuickBooks does payroll as well, and they have a service that can make those payments. But it's good to make sure that there's a check and balance. So even with us, a payroll company like PayEntry, we want to make sure that we let our clients know when we make those payments. So they actually can get a notification when we make those tax payments. Hopefully those other software programs can do that as well. So those are things that you can check on your client's behalf. All right, we'll get into benefits. So there's deduction compliance when it comes to all sorts of benefits. We think of healthcare. We'll talk a little bit about the ACA as well. So incorrectly deducting amounts, this is an area of compliance and some issues that we've seen. So deducting the wrong amount for health insurance premium, think about retirement contributions or other voluntary benefits. And these all can lead to underpayment or even overpayment, and they cause financial strain, as well as requiring those people to correct those issues, which all takes time and money. And then misdeducting, so failing to deduct a correct amount, especially when it comes to like benefit premiums, that can lead to a lapse of coverage or other issues with those benefit providers. So it's really important, as if your client has health insurance and the employees are picking up a portion of that deduction or that premium, making sure that the deduction gets in the payroll system on a timely manner, as well as making sure that the premium is paid to the carrier as well. Tax withholding, obviously we kind of talked about that. So that's important to make sure that those are keeping up to date. Another thing when it comes to health insurance is just making sure when a life event happens. So, obviously if an employee has a child, they get married, that information, if they decide to, add the spouse to their insurance or their child, that impacts the elections as well. So you have to make sure your clients are taking into account those new deductions and putting those into the payroll system to collect those deductions. And that kind of falls into the Affordable Care Act. But what the Affordable Care Act also contains is some other complications of who falls into that. So there's a whole set of laws and rules that you have to comply with. And what the ACA states is if a employer is over a certain size, they have to comply with this act. And that is not necessarily the number of employees, but they state the number of full-time equivalent. And so there's a calculation to determine if a company has over 50 full-time equivalent, they have to comply with the Affordable Care Act. And so if you have an organization that has around 50 people, you definitely want to make sure that they're going through that test to come up with the full-time equivalent. And it's another 3-letter acronym, or FTE, you might hear. But yeah, make sure that those clients are aware, because a lot of organizations at that, less than 50 are probably not offering healthcare. And as soon as they have considered a large employer, they have to comply with the ACA, meaning that they have to offer a affordable healthcare plan. So all of that complication, keeping track of it, some of the best practices is using a payroll service, a payroll provider like us. Our system can definitely keep track of those hours and create the full-time equivalent. So using a software program can help. Just conduct regular audits. Again, if you have a customer of yours that is around that 50 employee, double check, make sure that they're aware when it comes to not just the ACA, but also deductions. Make sure that they have good policies and practices around keeping track of those deductions. Training, obviously, that might be helpful. Leaning on your payroll providers like us, we can definitely help out when it comes to education. Those are all record keeping best practices that you should adhere to. All right, a couple more, and then we'll get into a real world examples. So, how to keep your clients covered. We talked a little bit about proactive compliance audits. So again, just double checking if they have employees, obviously the deductions, if they're in multiple states. Those are all things that you can reach out to your customers and make sure that they're doing what they're supposed to do. Leverage payroll systems like pay entry, leverage the technology, but also the resources that come with that, right? So most of the payroll providers, I mean, pay entry has a full HR team that can help. We have an insurance team and retirement specialists. So all of those can definitely be, you can lean on those people to help when it comes to those clients that need that help. All right, let's talk a couple real world examples. You know, I mentioned a bunch of areas to watch out for. And in one case in California here, we've got that meal break violation. And what had happened was we have an organization that was pretty much overpaying, kind of overcompensating, trying to provide, you know, better benefits than the competition. So not just, you know, increased wages, but also just being generous to their employees, thinking that I don't necessarily need to make sure that they're taking their meal breaks when they are. And that unfortunately came up and bit our client. And one of the employees raised their hand and started asking questions. I didn't get my meal break on time and yada, yada, yada. And they had an inquiry and they had an issue that they had to deal with. And even though they were taking their meals when they're supposed to, it wasn't being properly documented. So now they have to go back and spend a ton of time and energy doing that. We have timekeeping systems that can help them do that. And so the outcome is just a lot of work and a lot of time and energy to, you know, fix the problem. Another common thing that we see are these alternative work schedules. And so these are, you know, typically here a 410 or a 980 work schedule. These alternative work schedules can't just be drawn up and say, hey, team, we're going to have to, you know, change the way we work. We're going to do a 410 and let everybody know, and then they do it. Well, there's guidelines, there's has to be voted on and certified. And these are all things that have to be, you know, sent to an agency and set up. So you also have to change your handbook, and the timekeeping system has to be updated accordingly to make sure it adheres to the new schedule and overtime is being calculated. So if you have any clients that have that alternative work schedule, ask some questions, make sure that they went through the process, voted on it, and has to be certified into the state to make sure it is legit, and then obviously update all the documents as well. Those are probably a couple of the big ones. Those are a couple that I'll stick to that. So strategy, let's talk about what you can do for your customers and help keep track of all these different compliance issues that we talked about. And I think the biggest one is just that open line of communication. You heard me talk about you know, audits, make sure that you're checking in and that you're aware of what's going on with your customers. Are they looking to expand? Are they growing? Are they going into other states? You know, set up some expectations with them about their payroll process. You know, these are all things that, you know, you can do to help ensure that they're compliant with some of these laws and some of these agencies. Educate yourself. So that's another thing, is lean on people like us, pay entry, and our team to make sure you're aware, at least to be enough to be dangerous, know what's going on. You don't have to know it all, but at least identify that there may be a problem, and then you can get people like us involved to help. And what we say here is just a clear payroll process. So, right, be organized. You've probably heard me say that, errors. So even on a positive side, if I, have a withholding and I make a tax payment and it's over what it should be, those could be a potential penalty. So, but having a clear process established, utilize obviously payroll systems, payroll software. It doesn't have to be a payroll system like us. That, next step would be, like a QuickBooks, but have something in place to make sure that you're withholding the right amount of information and making those tax payments. Looking at the calendar. So making sure that they have, again, a clear process of who, when they get paid, what's the dates, the time frames, those are all things that just really quick glance, make sure that they have that documented, everybody's aware of those, and then create checklists. Make sure that they're doing all those things, look at the calendar when those items are due, so document everything, and then just continue to contact or communicate with your clients. We talked about the classification. So we talked about some of those industries, construction, trucking, industries that typically have a high misclassification of independent contractor versus W-2. So again, talk to your clients that are in those industries, make sure that they have those employees classified in the right category. We talked about exempt versus non-exempt. So these are the hourly and salary, right? Those are typically what you hear, but those salaried employees may not be salaried employees. They may not be exempt from overtime. So again, talk to the customers to make sure your clients that those employees have that duties tests, and they check all those boxes to make sure that they're classified correctly. The penalties on misclassifying those employees, paying a salaried employee that's really not a salaried employee, you've got to go back and pay all that overtime over that whatever period of time that they were misclassified. It can add up. So these are quick questions. Make sure, look at the documentation, look at their payroll records, check those clients out, and then do an audit. Yeah, we talk about this a lot. So again, review, look at their tax filing. So one of the things I can tell you in our system, Pay Entry, we can allow for partners to access information. So most payroll companies can do this, but these are really important. You don't have to bug your client about it, but you can log in. We can create a role that all you do is look at the payroll records. So these are things, these audits and payroll reviews that you can do without bugging your client about. Take a look at their tax filing, look at their quarterly returns, make sure that they were actually done, the W-2s. So those are all good things to think about. We talked a lot about data practices, secure data practices. Again, there's a lot of things that you can do. Multi-factor authentication, make sure your clients are utilizing that. Restricting access. So, we don't want unauthorized personnel accessing that sensitive data. So make sure that they have different roles set up for those. Network, make sure that they have different protections around their network and their data. And again, just audit, make sure that they are auditing and that they're taking a look at that, protecting that sensitive information. And then I, mentioned all the alphabet soup of the regulators. So, you don't have to be an expert in it in everyone, but what you can do is tap into resources like ours where we can at least email you when something big happens. And so, you can do that a lot with the state agencies and the federal agencies, periodically check, go on to websites that can also let you know when something big happens. But those are all things that you can do to help insulate your customers. Keeping track of calendar, also just looking at the year and making sure that you're aware of when things are supposed to happen throughout the calendar. And those are all things that you can do to help keep your clients compliant. Payroll records. So, these are all really important, especially when you've got, timekeeping records, meal break, validating that people actually took their meal breaks. So we look at not just, payroll data and tax filing, but also down to what happens day to day with employees. So these are really important in case somebody comes knocking on one of your customers' door, that they have a bunch of questions to ask the client, that they have the answers. And so, detailed payroll records for those states that have some of these leave, meal break issues or meal break requirements, they have the data to back it up if they ever get called out. Okay. And then just keep them for at least 3 to 7 years. And that's the IRS and the state typically says that you have to keep this information, store it in a secure place. A lot of the payroll systems have electronic access, but I always tell clients to keep it in another place as well, another maybe on-site storage, or in another web locker, if you will. And so contingency plan for errors. So obviously you want to make sure that there are no errors, but if they do have a problem, that there's a plan, because what will typically happen in these IRS or state audits is not just, hey, you made a mistake, but what did you do to correct that? Okay, so we want to make sure that there are some corrective action plans, having a protocol, to make sure that you quickly fix the plan, make sure it's all documented, that you have something in place. That could all help when there's an error or something else that might pop up. And then leverage pay entry services. So we have a great resource. You've probably seen Brett. He's our HR expert. He gave a great topic the other day, a webinar. He probably does one once a month around our HR compliance issues that companies have to deal with. But we also have a team of people that can help when it comes to insurance, retirement. All of our sales reps are pretty well educated on all things payroll. There's a lot of functionality and tools within the payroll systems that companies should utilize when it comes to communicating to our clients' employees. These self-service portals become a really great asset to have for things like communicating a new policy or a handbook, and making sure that they sign off that employee saw the handbook. So these are all strategies that we can talk to you about and make sure that your customers are covered. So I kind of talked about, helping you get the answers to the questions that you and your customers have. We also can help mitigate the risk exposure, right? So relying on a partner like PayEntry helps not only you educate on the compliance issues that your customers will have, but it'll also help mitigate any kind of risk exposure that they have. And when you think about partnering with these payroll companies like PayEntry, it basically gives you a expansion of your service offerings. So think about leveraging the expertise that we have to help educate your customers in these areas. Make sure I say this a lot, make sure that they're utilizing that system that's in front of them. And one of the common things that we see with these other payroll providers is they have the same kind of software that we do, but their customers aren't utilizing it. So that utilization, as I mentioned, that self-service portal, communicating to your employees with, hey, this is their new handbook, make sure that they have seen it. Those are all things that every payroll company, every client that has a payroll service provider should be doing. And that just helps you retain your clients and also help increase the profitability. So kind of the next steps with this would be scheduling a consultation. So our team is ready to help answer any questions that you have. And really, it's just the goal is to help your business succeed and obviously your customers succeed, make you look good to your customers. One of the things that we pride ourselves on is the accessibility and responsiveness. So not just from our sales team, but also our customer service team. They'll get a dedicated rep on the customer service side to make sure that their questions are answered. And then for you, we've got a great sales team here that can do the same thing. You'll have a dedicated partner that can work with you in implementing some of these strategies that we talked about. Alrighty, so that concludes our webinar. Hopefully I didn't put everyone to sleep with all those compliance and boring topic, but yeah, I appreciate everybody's time.